All right, today we're doing a deep dive into the latest financial report from a company called Totm Technologies. Now, at first glance, the numbers look, well, they don't look good. But stick with us, because this is a perfect example of why you can't just read the headlines. There's a much more interesting story bubbling just under the surface. So, here's how we're going to break it all down. First, we'll look at those headline numbers that got everyone worried. Then, we're going to dig into what really went wrong with their revenue and, crucially, how the management team reacted. After that, we'll follow the money, and I promise you, there's a surprising twist in the story. And finally, we'll put it all together to figure out what this really means for an investor. Okay, so let's get right into it with the headline story. If you just took a quick peek at the top line numbers from their profit and loss statement, you would have every reason to be concerned. And you can see why right here. Revenue, that's the money coming in the door from sales, took a huge nosedive, falling 46%. It went from $5.7 million down to just $3.1 million. At the very same time, the company's net loss, how much money they're in the red after all the bills are paid, actually got bigger. They lost $2.9 million in just 6 months. So to put it simply, they were making less money and losing more of it. Not a great combo. Which brings us to the big question, right? What is really going on at Totm Technologies? Because let me tell you, these numbers do not tell the whole story. Not even close. To find the real answer, we have to pull apart that revenue number. You see, a drop that big is almost never an accident. So the first thing we have to ask is, where on earth did all the sales go? And lucky for us, the financial report gives us a really clear answer. When you look at the data, you can see the problem was incredibly specific. First off, almost all of the damage happened in one single country, Indonesia. But the real smoking gun is in the type of service. Revenue from technical support? Pretty stable, actually. The absolute disaster was in sales of licenses, which just went into a near total free fall. And collapse is really the only word for it. Look at this. Sales in that division cratered, falling from almost $2.9 million to just over $350,000. And here's the really crucial part. License sales are a high-margin business. That's where they make the big bucks on each sale. So this wasn't just a drop in revenue. It was a direct hit to their most profitable area. This is the heart of the problem. So with revenue just falling off a cliff, what did management do? Well, this is where the story takes a really interesting turn. See, they were faced with a crisis they couldn't immediately fix, so they focused on the one thing they could control, their spending. And boy, were they aggressive. First, they went after their biggest expense, people. Employee benefit expenses were chopped by a pretty significant 21%. Then, they turned their attention to external services. Check this out. Legal and professional costs were slashed by a massive 55%. I mean, that shows some serious discipline. And they didn't stop there. The other expenses category, which, can sometimes be a catch-all for wasteful spending, was also cut by more than half, down 53%. So the big takeaway here is while they couldn't control the sales environment in Indonesia, they took swift, decisive action to slim down the entire operation. That kind of action shows you've got a responsive management team, which is great. But cutting costs, that's just playing defense. To see if a company is really healthy, you have to follow the cash. And this, my friends, is where we find a fascinating plot twist. Okay, so at first glance, the cash flow statement doesn't look too encouraging. As you can see, the company's core operations, just the day-to-day business of paying suppliers and employees, actually burned through over $600,000 in cash. So even with all those aggressive cost cuts, the business itself was still losing cash. And honestly, that's where the story could have ended. And ended badly. But here's the twist. While the operations were burning through cash, the company was busy doing something else entirely, raising money. Look at this line from the financing section. They successfully issued new shares to investors, bringing in over $3.2 million in fresh cash. So when you put those two numbers together, the picture changes completely. The business lost about $600,000, but new investment brought in over $3.2 million. The net result? The company ended the period with a very healthy $2.7 million in the bank. They went from what looked like a dangerous cash position to a real position of strength. This brings us to our final section, the investor's outlook. So we've seen the revenue collapse, we've seen the aggressive cost cutting, and we've seen the surprising cash infusion. So now let's step back and look at the risks versus the opportunities here. Let's start with the risks because they are definitely still real. The number one question, without a doubt, is whether they can get that license sales engine started again. That's the key to everything.
Second, the company is really dependent on a single market, Indonesia, which is already proven to be pretty unpredictable. And finally, you just can't ignore the history of net losses. They've got to show a clear path to actually making money someday.
But on the other side of that coin, there are some really powerful opportunities. First, management has proven they can be tough and disciplined on costs, which is exactly what you want to see in a turnaround. Second, that $2.7 million cash balance? That's huge. It's a war chest. It buys them time, a long runway to fix the revenue problem without panicking about cash. And finally, the fact they could raise over $3 million shows that other investors still believe in the long-term story here. And all of this brings us to the final question for any investor. The company survived the revenue shock. Management proved they can run a lean operation. And now they've got the cash. So the question is no longer about survival, it's about growth. Can they take this stable foundation, this full war chest, and finally build a profitable business on top of it? For anyone looking to invest, that is the only question that matters.